like talk about stuff too consequential. Hey everyone. I mean, but
What up?
I think maybe we give folks a minute to
Good.
join
So
us.
then we might as well start with some heat, which is I am actually working with a personal chef to come to the house a couple days a month. And
Okay.
one of the things I'm going to tell them is that I have a standing order that Wagyu beef is trash. And I want them to change my mind. So if you have a
Okay.
recipe for me to give to her, I would love to do that.
You
so
just
that
tell her it's
Okay.
so simple, okay? And
Okay, so simple.
and I don't. To me, it is no different than any other steak in terms of prep. Okay, you salt the shit out of it. Okay, you put so much salt on that thing that it looks like it snowed.
Yep.
Okay, you put it in the fridge
Okay.
overnight, and it's like a dry brine basically. Okay.
Yep.
And then when you're ready, you reverse sear, and you can reverse sear in a smoker, which is it's pretty good. But it adds a good amount of flavor, and to me, like the Wagyu doesn't really need that. A regular steak, it's better for. I'll reverse sear in an oven, 250 for 40 minutes, get it up to somewhere around 105, 110 internal temp, pull it out, get a cast iron pan ripping hot. Nothing necessary on the pan, especially Wagyu, but for steak, nothing. You just get that cast iron as hot as real hot, and then sear that thing.
And then somehow that makes it taste better than the 3 other times I've tried it following your advice, and it's been terrible every time.
I don't know what you're getting.
What is this? Just some magical thing that's like fairy dust is going to happen now, and now it's going to be good.
The salt. You gotta no, but all right. Are you getting a steak that is like more fat than meat?
Our boy's Salt Poppy, all those restaurants are closing. He's going out of business. So what another terrible comparison.
I want to know, what kind of meat are you getting here? What does it look like? Is it all fat and there's a little bit of meat? Because that's like the super expensive, and I don't even like that level of Wagyu.
Yeah, I've tried it. I genuinely have tried it like 4 places now because you keep telling me it's so good, and I'm like, my taste buds just have to be messed up, and I literally am convinced it's me. So I keep trying it, and every time I try it, it's just not good.
Okay, I forget. We had this conversation. What's your favorite cut of meat? It's a fillet?
Fillet.
Right. Okay. Yeah. I think this is like the
nice
inherent,
and lean, mostly meat, not as much fat. That's what I'm going for.
Yeah, because so that's the problem is you have poor taste, and so no. Have you tried a fillet Wagyu? Or have you just been getting like a ribeye?
No, definitely not only a ribeye. That's for sure. Because every time, like, there was a couple places I went. One of them, I went to 2 different Michelin star restaurants here in San Diego. And fun fact, I'm not a foodie. I don't even really care about food. Like, if there was like a pill I could consume and get everything I need for the day in one pill, I'm good. That'd be perfect.
So you're a live to eat, and I'm an eat to live personally.
I could tell. Yeah. Because you got me all sorts of messed up on this Wagyu nonsense. And like I said, I'll tell her exactly what you tell me to do, and then I'll make a video for you. And I hope it's good. I want to
tell her to get the filet Wagyu, and tell her to get like not the A5. Like, don't pay a ridiculous amount of money.
Okay.
Get the MBS like 7 or 8 kind of thing.
Don't know what that means, but I'll relay those numbers in that order. Yep, get her some mortgage-backed securities. That's going to work great. She's going to be going to Morgan Stanley to get me a steak.
Yeah. I mean, I got to tell you, those banks, they got expense accounts. They got like the best meals.
Oh my God. That's, yeah.
So let's talk about the banks. Banks are going nuts today. You seeing this?
Everything. It was funny. Right when we first started, you had asked me before we started recording, you were like, yo, what's up? And my comment was literally everything. You could throw a dart at a dartboard, and you would be more like just everything is skyrocketing.
Everything's going crazy.
Yeah. So talk to me about the financial side though, because financials have been showing strength for a little while. They've been having decent earnings.
They have. Yep.
Obviously,
I
the
think they've
yield,
probably been running in anticipation of this event.
which is funny to me because I agree with you. I fully agree with you there. The funny part about it, though, is that I feel like the market is like multiple times this year definitely front ran itself. And
Yeah.
it was a little interesting to see if that was going to be the case here. But so, what are your thoughts? You
Well,
see
I see,
financials moving.
banking up across the board. So regional banking, KRE, the ETF, up 12.7% when I checked a few minutes ago. KBE, banking overall, up 11.25%, being driven by Goldman, up 13%, JP Morgan, up 10.5%, Bank of America, up 8%, Morgan Stanley, I saw, was way up. The big banks are up as much as the regionals. US Bancorp I had up here earlier, way up. So yeah, banks are, I think, if you look at all the sectors, you've got like banks at the top rallying harder than anyone else, and then oil services I think was second, which is interesting. But that's the drill baby drill that's coming. So to me, the bank stocks are moving because, well, they are now facing a deregulatory environment, right? So when you think about what can we learn from his first 4 years as to what's he going to do in his second 4 years, if there is any continuity of policy, which is a big if. But how can you have to assume there has to be some continuity, and that he's going to be, he's going to do some of the things that he has run on. One of those things is deregulate the banks and let them go nuts. that's what the bank stocks are telling us. They're going to go nuts. You can have opinions on the place of regulation in financial markets, but markets are telling us banks are the place to be right now. They are the biggest
YOLO!
beneficiaries. Yeah, that's exactly right.
What do
Really
you
something.
what do you make on the corporate tax policy? One of the things that he talked about that I actually thought was really cool was this idea of 15% tax for companies that move manufacturing within the U.S.
Mm-hmm, mm-hmm.
Thoughts on that?
Yeah, I think anything. So what I said to you before we jumped on was I think there's a lot of bad that's going to come, and there's a lot of good. And I would have said the same thing, had the election gone the other way, because
Sure.
neither of these parties really resonates with me.
Hence why you fled to Canada.
Yeah, well, unfortunately, they don't really up here either. But I think that the good is actually, interestingly, the best part of what I hope the next 4 years will bring is the continuity of some of Biden's policies that the two have in common. And there's not much, but the the main thing that they do have in common is this drive to onshore manufacturing. They have different approaches, but that is a shared goal of the two. And Biden did that with the CHIPS Act and some tax incentives that were in the Inflation Reduction Act. Trump says he's going to do it with tax policy and massive tariffs, but the goal being the same: onshore manufacturing, which I think is one of the most important things we can be doing. The second is this populist streak that they both share for antitrust. And say what you will about JD Vance, he is probably one of the only Republicans out there that likes Lena Khan, who is the head of the FTC and has been leading the Biden administration's antitrust efforts. So those two things, to me, if there is some continuity, I think is a huge victory for the U.S., a huge win for sort of everyday people, but also things that take a long time. So you don't see results from these kinds of policies in a month or two. These things take years. That being said, you can see some impacts in on the very short term. So tariffs, for example, if I think this document you just sent over to me before, which compares the two from a policy perspective, says that one of his priorities is to implement a 60% tariff on goods from China. And he has spoken a lot about that. That is not something he needs any legislative action to do. He can just do that. That is the kind of thing. Now, again, if you look at what Mike Johnson said when he was confronted about the CHIPS Act a couple days ago, he said that he would consider revoking it. He later walked that back because the CHIPS Act is very popular and has been very successful. But philosophically, Trump believes that onshoring is better accomplished with tariffs rather than the kind of inducements and shared investment and subsidization that comes from the CHIPS Act. That's, these are two ways of approaching a similar problem. The tariffs concern me, and I will say that on tariffs, I have come around dramatically on tariffs. I have a sort of standard economics education that say when you implement a tariff, that tax goes directly to the consumer. And in the short term, that is absolutely true. And so a 60% tariff on Chinese goods is a tax on US consumers, and it will be quite inflationary. And I think people need to understand that that is coming. That is part of the reason why, and we'll get into this in a bit, that's part of the reason why we're seeing the long end of the yield curve going up as it is today.
If that's the theory, though, why are equities up so much?
Equities love inflation.
That is a hell of a mug. What did I just look at? It like blends in with your shirt for the top.
It matches, right? Yeah. Oh, geez. Juju. Oh, boy. That was close. What up? This is Juno.
Hold on.
She's very sweet.
Mine was a little pissed off because he was sleeping, but
look at that.
We got him.
I know.
Oh, he is super sleepy. I did kind of just straight up bed snatch him. He grumbled at me. He wasn't stoked on it. But
okay.
I mean, he'll get over it.
You're going to hear her barking a little bit, but okay. So yeah, so equities love inflation. If you look at where you want to position yourself for inflation,
another question.
Equities outperform almost every asset class in an inflationary environment.
What happened to small caps?
Oh, I mean, I'm not, in terms of.
And then why are small caps up almost 6%? Oh,
because it's not just a story of inflation; it's a story of growth.
There we
go. So,
and that's. And just sorry, and I'll stop interrupting you, I promise. But that's exactly the main thing I wanted to highlight there, is because as we talk about the inflationary pressures, I think one of the problems is that sometimes people, as they're listening to those dialogues, they think of it in a vacuum, right? And what you were just about to get into is the composite. So I just want to highlight that for everybody, because that's the nature of economics and markets, is they're multifaceted and there's a lot of interaction. So I will shut up now. And I actually do really want to hear your perspective, though, on like why small caps are running so much then.
Yeah. So I think the story the market is telling us right now, and look, let's just cover at a high level what is happening today, right? It's banking stocks going crazy, crypto flipping nuts, right? Generally all stocks going higher, gold and real estate down, healthcare flat, which I find strange. But let's put that aside. The dollar is going crazy, right? The dollar is strengthening right now. And so you're seeing copper and gold fall sharply. You saw oil fall to start the session. It bounced after an inventory build was announced. And then you see the 10-year testing 445, which it was there. It's let up a little of that, but it's last I checked, it was at 443. So it's still holding pretty close to that. So what I think that means in terms of what the market is telling us is that we are in for a high growth phase, a deregulatory phase, and inflation. It will be coming back, and therefore Fed rate cuts are becoming somewhat less certain. And And I think that that's not in the near term. The market is still pricing in a near certainty of
I'm
another
grabbing the Fed
25
watch
basis
tool
point
now.
cut tomorrow. Yeah. But what we have seen from Fed Watch is there's been no change for the 25 basis point cut tomorrow. The chance of a 50 basis point cut through the end of the year, so an additional 25 basis point cut in the December meeting, fell to 69% from 78%. And then the chance of another 25 basis point cut in January fell from 43% to 32%. Right now, the Fed rate a year out is seen at 3.8%. So there's more uncertainty, I think, right now, because, like I said, some of his professed policies are very inflationary. Some are very bullish for growth. I think some are very bearish for growth. If they come in with these tariffs, that's going to be a real headwind to growth. If they come in and slash government spending like they're talking about, while I'm not saying that that's a good or bad thing, because I don't really want to get into that. The near-term impact of slashing government spending is a drop in GDP growth. That's just how it works. That's the GDP equation. Is government spending is a piece of that, and so it's funny, like these two forces are kind of opposed to one another, right? Inflation on one hand, growth in some ways, and then a slowdown in growth in another. And I think the market's kind of trying to piece together what's going to dominate 6 to 12 months out, which is what it's trying to figure out right now. I think there's a lot of uncertainty. I personally think that inflation will be back as a result. I think
Did inflation leave?
it didn't leave, but it was mostly under control. Not ideal, but under control.
Agreed.
And I think that if he comes in and he really, I don't know what the timeline is for slapping a 60% tariff on Chinese goods, but boy, that is extremely inflationary. Does it reduce China's power over time? And let me clarify one thing that I said. I started to talk about tariffs as a tax on the consumer. And again, that is the standard economics treatment of a tariff. That's exactly what a tariff does. There's been some really interesting work that the center. What is that? Sorry, I can't remember suddenly the name of Oren Cass's organization. Let me look it up real quick for a second. American Compass. And what they did was they looked at the washing machine tariff that Trump put in place. And what they found in his first term, what they found was that while indeed in the short term, it went straight into the price, so the consumer was paying the tariff, surprisingly, in the intermediate term, it had far less of an effect. And that goes against conventional economic wisdom. And it showed that it was effective in spurring domestic production and increasing competition. And so while I think these tariffs will be really destructive in the near term, and slashing government spending will be really destructive in the near term, and Musk was asked about this a couple of times, and he said, yeah, it's going to be painful to start. If that's a pain that the populace is willing to sort of incur, there are potentially very good long-term benefits.
You know what they say, short-term pain for long-term gain. I honestly, obviously, like I completely agree with the way that you're analyzing it, especially the short-term implications. I was actually really surprised though, because I was looking it up, and what was it? The previous increase that he did was from 7.5% to 25%, ranged depending on what it was.
Yep.
And it was about 370 billion worth of Chinese imports. And I don't think the consumer really got crushed by that. Now, that's still a much smaller increase than what he's talking about doing. But one of the things I'd like your thoughts on is, how do you view kind of the counterweights here, because we're talking about making things from China more expensive. And there's a lot of strategic reasons. And again, from a military background, it's even deeper than that. Mm-hmm. But he's also offering some pretty generous tax benefits to domestic production.
Mm-hmm. Mm-hmm. Yeah.
So how do you view, I don't think it's a one-to-one, but how do you view the relationship between those two things?
Yeah, I don't know how it's going to sort of net out, I think is the best way to say it.
Yeah.
And I honestly, like, I think these kinds of experiments are good to run if people are okay with the short-term pain, and they voted for him. And to be frank, like, Musk, as I said, he was out there saying this could result in short-term pain, and people voted for it. And so, this is sort of the beauty of democracy, right? Like, these are compelling policies. And I referenced Oren Cass and American Compass, and I'm actually talking to him, and I hope to have him on a future stream, because there are two camps on either side, and one is led by Oren Cass and American Compass, the other is led by Matt Stoller, and I think the American Economic Liberty, something like that.
Oh yeah.
And
I just like that name.
Yeah, and they are both. I think they would both be a fascinating conversation together, but I think they are both generally in agreement as to what our goals should be from an economic perspective, and those goals are competition. They come at it from very different perspectives, but they share a lot of the same views on these issues, and I think there's a lot of mutual respect there. And JD Vance comes from that position in the Republican Party, and he's generally been an outlier. And so I am somewhat cautiously optimistic that if, as in the first term, a lot of policy is driven out of the vice president's office, because it didn't seem that Trump was terribly interested in the nuances of policy in his first term, and so a lot was driven by the people around him. If that holds true, and economic policy is driven by that school of thought, I do think it's very healthy, and I do think it's very pro-worker and pro-competition. And I think that those are how you fix I think there are two things the U.S. needs fixed: competition and concentration, and political extremism. Unfortunately, none of this does anything for political extremism, but it does really do something for concentration and competition. So, and I think the market's trying to grapple with that. A lot of these, you're seeing when you see, like, small caps going nuts, for example, is that the market saying that there will be a flourishing of competition, and that the large caps and the drive to consolidate and merge might still be something that, while not quite as frowned upon in the Biden administration, will still be not an automatic approval like it has been in prior corporatist administrations. And I would lump Trump's first administration in that. That it was very corporatist. There was never any issues with mergers and acquisitions, and the same was true of Obama and W and Clinton, and has been for a long time now. Biden was the first administration to start to change that, and I do think that's one of the very few areas that there is agreement and overlap. I think that was a pretty long-winded answer. I'm sorry.
A ton of context.
I like talking antitrust. It's
like, I was going to say,
as markets.
Ton of context. So a couple other the big policy things that he's discussed. Well, let me zoom out first from going too far into the Trump stuff, because another thing I'm interested in is, do you have any sort of general thoughts about like a red sweep and what that could mean as compared to the Dems holding on? I think, what is it, the House right now, that they're still, that's up for contest. Also, quick shout out to Reese and Lizzie in the chat. Those are people from my community.
Nice. Hey, Reese and Lizzie.
But yeah, so what do you think about that?
So I am someone who generally prefers divided government.
Agree.
And compromise.
Yep.
So my personal preference would be that there is some check and balance here, because that you won't find that in most of the judiciary. Certainly won't find it at the Supreme Court, where that sun is.
I
It's
know
always this time of day.
You have a vibe though. It's like
Yeah?
aura.
It's like,
yeah, like you're literally glowing. It actually seems like you could stand to see a little bit more sun, to be honest, because like
that's a common
it's like a straight reflection. You almost look like the moon to me, reflecting the sun's light. So,
thanks.
Yeah, but
San Diego, you're in a privileged position. All right,
something
that's
like
not
that.
one
Now,
we get up here.
Speaking of privilege, though, to derail the conversation entirely, I noticed that your plant count is much higher than mine. I hate losing. I'm pretty competitive. So you have a lot of plants. I have one.
Ooh,
now,
I got two also that you're not seeing on either.
All right, so that's just disrespectful. So how many do you have so that I know how many I need to stuff in my office to one up you? What's the?
You got 1, 2, 3, 4, 5, 6. 6 you can see, 2 you can't, and that's all my wife. I have no. My thumbs are as brown as.
I honestly don't care who it is. I'm still going to compete with them, and I'm going to have like 32 plants in my office. I'll figure it out. Okay.
It improves air quality so much.
It's you joking, right?
No, it does.
It's utter bullshit. It's utter bullshit. So
just let me tell myself that, all right?
There's actually, because I thought that for a long time, and then I started looking up a bunch of papers on it, and it came from learning about the International Space Station, and they essentially were joking about that comment that we think that it helps with air quality, and they were like, you would need so many plants in a completely enclosed space for it to make any meaningful difference.
Yeah, so, I mean, we use like the high-end filters in our HVAC system. That's probably doing way more than the plants.
Yeah, I imagine so. But they're nice, and it's also again started a plant competition. So,
okay, all right. I can't wait to see the next stream then.
I tell you what, man,
you're gonna be in a jungle. You're gonna be.
I know. I might have a ghillie suit on too. I might just be the plant. So talk to me a little bit more about the checks and balance, though. The reason why I'm really curious about that is because, and I was actually talking about this on a stream last night, and this is something I'm going to talk on a stream tonight about, because I think that the way that lands has a pretty shaping perspective still on what markets can look like. Yeah.
100%, right? And so, and I think that the odds are this is going to be a sweep. Dramatic odds, I don't know what the actual odds are. I saw someone throwing around 90% chance that that they'll end up with control. If you look at nearly every single county or maybe every single county she underperformed Biden. So it seems to me very likely they'll have razor thin control of the House, and a surprising majority in the Senate. That lets you do some things. Like, I think the margin in the Senate is going to let them put his cabinet in place very quickly, unlike the first the first go round, where that took a lot longer. But yes, for things that require legislation, a divided or a divided government, or even a razor thin House majority, that will make things a lot tougher. An important note: a lot of what they want to do very quickly, for example, tax cut policy and various riders they want to put through, would be in a reconciliation bill. That just requires a simple majority in the House and Senate. But again, if you have a razor thin majority or none at all, that becomes much more difficult.
A quick update on the House poly market right now is showing like 98% probability Republican House.
Yeah, and that's what you'd expect in what we saw yesterday, which was a real significant move to the right across the country. And I think even in the blue states, they moved real far right.
I think that highlights one of the coolest things, though, about markets. And we've been I think you and I talked about this the last time we connected a while ago. the way that the markets look like they were positioning in favor of Trump, even what was that, a month ago or so, and it's just kind of been like that.
Yep.
I bring this up because the nature of polling, I had no idea that the election was going to be like this disparate. I thought it was going to be more of a contest. I really did.
Oh, yeah,
and
me too. Yeah.
It just goes to show how not trustworthy polling. I'm not saying that people are out there with bad intentions. It's just a certain sample that they're collecting. But
Yeah,
then that's the really cool part about markets is that it's the collective intellect. And they're trying to position based on what's going to move, based on who they think is going to win. And it's a collective injection of that. Now, I still tend to favor like equity futures, bonds, commodities as my proxy. But the advent of and the expansion of prediction markets is becoming a little more accessible. What do you think about prediction markets in terms of their predictive capabilities? I know that you have glasses and you like to do nerd stuff. I don't know if you did any nerd stuff yet on prediction markets.
I do have glasses.
Yes.
I do like to do nerd stuff. I can't argue either.
I know both of these points. Yeah. You and I have known each other for a little while now. I know what's up.
If you had come to me last week, I would have said that I do not think prediction markets are better than polls. I would have been wrong. And that comes from someone who is a really strong believer in markets and the collective wisdom that markets embody, and the fascinating information that you can glean from markets, the sort of like the implicit information that markets are just excellent at incorporating and expressing. And so, I think I was maybe not true to myself leading up to this. And I think one of the most important things you can do is recognize that a belief you have is wrong when presented with new information. So no, I have not done nerd stuff with prediction markets. I have long followed them. I've been on Predictit for a long time, betting on politics in a small way. I mean, that's kind of the nice thing about Predictit is you can't bet too much. There's like an $800 limit or an $850 per contract limit. Yeah, and that's and that can also be why it is sometimes seen as a bit more accurate because you can't have whales influencing it. But yeah, and if you look at Polymarket, you could have said going into this that this is the expression of preferences from crypto bros and not and more of the hope of what they wanted to see versus the reality of what was going to happen. But that was clearly wrong.
Yeah, because, well, it leads me to another thing, right? Because I actually would argue that people with more capital tend to be way better informed than somebody that's putting on a $800 trade and a bunch of them. Like that's kind of almost just like flattened out groupthink. And I prefer to see people. Now, to your broader point, though, you never know the trade behind it. And I think that's really important for people to always keep in mind is that, for example, the crypto bro theory. There could be a thing where crypto bros are already long crypto. And then if they're getting long event contracts for Trump to win, they're just doubling down on their position. Why not just go more into crypto?
Right.
And some of them might actually be trying to hedge, because I was talking about this on a live stream last night. If I wanted to hedge, the Harris bet on the prediction markets last night was fantastic. It was like 35% probability. I mean, the payout on that is asymmetric, and if you want to hedge, it's a good hedge.
Absolutely.
So, what do you think about that? Specifically, the theory that I have, which is smaller bets would be less efficacious in terms of predicting outcome because it's more susceptible to almost groupthink and not as informed involvement.
So if you look at Predictit versus Polymarket leading in, Polymarket had her at 38 cents, Predictit had her at 44 cents. We cannot say which of those was more accurate. You'd like to think so. You'd like to say, well, obviously 38 was more accurate because look at what happened. But they're almost statistically indistinguishable, those two prices, right? there's divergence because there's not a viable arb. Had there been a viable arb play, had there not been limits on predicted, or if there was easy flow of funds between the two, they probably would have converged. But not having them converge at least gives you some interesting data points to look at, to say, well, predicted, thought it was slightly more likely that she had a chance than Polymarket. But the truth of it is, simply from an outcome, you can't say whether the odds were correct in one way or the other. So I hear what you're saying, and I don't know is the honest truth of it. I can see the argument. I can also see the fact that without limits and without tremendous volume, a market is very manipulatable.
Yes.
And that is true in equities, and it is true in futures, and it is true in prediction markets. And therefore, had the whale in Polymarket not been some random French dude, but had it been Elon Musk trying to increase the perception that this was a foregone conclusion in order to make that a reality,
do you think
I don't think any of us would have been surprised. No. I think it was some random French dude who figured something out about the polls and put according to him, put his entire net worth into that bet. And man, did he freaking nail that trade. Good on him, right?
Because
I kind of love to see that kind of thing.
The other thing I look at that, because a lot of people were like, oh, Irma Gerd, there's manipulation. And I'm thinking, one, if it's the dumbest form of manipulation if that's what it was. Because to put on a trade at that size all at once at such an off hour, it's everybody could see it. Everybody could see it. So it's not I feel like if you actually wanted to manipulate an outcome, you would chunk your trades up much smaller pieces and you would make it really persistent over time. You'd be way more calculated than that. Mm-hmm. So and again, maybe that's just giving people too much credit, because also to your point, this is a homie that just YOLO'd life savings.
Yeah, I mean, this is like the dude you'd find at Wall Street Bet. So you think they're gonna cost average in, they're gonna algorithmically slice? No, they're gonna be like YOLO. They're gonna move markets.
Good for them.
Good for them. Yeah, I love to see a degenerate make a good amount of money. I'm sorry, I do. There's
it's the underdog, because you also have to just enjoy the humor that for every one of him, there's thousands that have blown up on the back end. So it's you need to take a look at the success cases, when they pop up.
Well, to your point on hedging, right? So let's say, you were really staked in Kamala winning or Trump winning. And, should you bet that or should you hedge that, right? You come in and you're like, God, I want to see him win so bad. So maybe you should bet her, right? And I'm not saying it from a financial perspective, like you were talking about hedging your crypto exposure, which was that's one very reasonable hedge. But what about your emotional exposure? So if you were desperate for him to win, and you bet a lot and he lost, that's a double loss, right? But if you were desperate for him to win and you bet her and he lost, at least you made a little money on it.
Got something to show.
Got something, right? So I don't know. Maybe folks should be emotionally hedging sometimes. Maybe that's what prediction markets let you do too.
I think just control your damn emotions. But that part aside, if we're looking at the tariff idea and the impact, do you not think that will start showing up in stuff like Walmart, and also Walmart probably? I'm just thinking, whenever you go through Walmart, it's it's made in China. You know it's made in China.
Yeah.
So, but it hit highs today.
Well, because it doesn't affect, let's say, Walmart's profitability unless it leads to a dramatic reduction in growth. And I think the market is torn. No, because Walmart's just going to pass it through.
But that's what I mean is I don't know if do you actually think the average Walmart consumer can go purchase the same amount of goods if they're 60% more expensive? Because I would argue not.
Yeah, I think that's a fair point. But yeah, no, I think you're right. But at the same time, a lot of that is necessities. It's not like you're not. These aren't discretionary purchases, and I think
Dog,
consume.
when's the last time you've been to Walmart and looked at someone's cart?
Well, yeah, that's fair. But I was
Because
looking at CNBC. Wait, let me pull this up again because
yeah,
I
do
was
that.
looking at.
Because in the meantime, I'll tell you a story. Because I grew up in Walmart because I was poor as shit.
Yeah.
And I still go. I love Walmart. I love that you can go get milk, steak, and shotgun shells and oil from the same place. You can get
Yeah.
everything. It's the
Yeah.
greatest institution. Big
So look,
fan,
here's what
big
we're
support.
seeing. We're seeing consumer discretionary up 3%, and we're seeing consumer staples down 1.5%.
Okay.
So I don't know. I don't. How do you
And
interpret that?
it's well, the way that I've been looking at this is sometimes I think that we have to remember markets function. Obviously, we talked about this before as a discounting mechanism. We already covered that. But I also think that there's an element about different time frames. And I think sometimes people think that something is going to discount perfectly to where it's going to be trading, future cash flows will be at 9 months from now.
Mm-hmm.
And there's a lot of interim play that happens. And to me, I think that's some of what's going on here. We saw this happen repeatedly with the initial Fed rate cut. We talked about this previously, where markets started pricing in the rate cut, small caps started running, and then they got slammed because it didn't happen. New news came out, whatever, and it got crushed. So I think that the markets are really effective at discounting, but I do not think they're perfect. And I obviously don't think it's a linear equation. And the other thing I would add on is I was trying to do some homework on understanding what does the roadmap look like for this 60% increase. And I haven't seen anything yet that I can actually say like this is the defined approach
Right.
yet. It might be
Right.
out there. I just haven't seen it yet.
Yeah,
But
I haven't either. Yeah.
The other guess is that might be part of this equation, that it might not be 60% tariffs overnight starting today. And therefore, the market's not discounting that just yet.
So look, there are other elements as well that are incorporated into the stock price besides the tariffs, right? So let's talk about those for a second. One, it would be the corporate tax rate reduction, a small one from 21% to 20%, but a reduction nonetheless. Another would be the certainty that now comes that the previous tax cuts will be renewed. That was not a given without him being reelected. And then this other proposal, which is this idea of capex to permanently extend the capex depreciation rules. And then there are other things, so that the tax cuts and potentially eliminating taxes on tips, overtime pay, and Social Security benefits, reinstating the SALT deduction. Like he actually got a lot of support from SALT states like New York and New Jersey, a lot more than you would have expected. So there's a whole lot more, I think, at play than just the tariffs. So yes, if in a vacuum, the prices of a cross section of Walmart goods went up by 60%. I don't think you can make that argument because there would be some shifts away from China to continue to get discount goods, right? So it's not going to just result in a straight 60% price increase. I think the estimates were around 20%. And then you have also these tax reductions on the other side and corporate margin improvements. I think it's just what the market is maybe painting as a more complex picture than that. It is really interesting though that there's sort of this 4.5% difference between consumer staples and consumer discretionary. And discretionary is up 3% and consumer staples down 1.5%.
What do you yeah, to me, my best guess there is that it might come down to what the expectation of the tariffs is going to be and when. That's my guess.
I think that's part of it, and it could also be that there's more hope for maybe increased merger activity on the discretionary side.
Oh, interesting.
Yeah, I could see
I
that
didn't
as
really think
well.
about that. I wonder, because that you're right, that did slow down massively for a while
It did,
too.
right. And while
Yeah.
Vance is a supporter of what Lena Khan has done in some ways, that is not a position held by the party in general, and it is unlikely she will remain in that position. So it really, it's all kind of up in the air in terms of who are they going to staff these agencies with, and what are the policies going to be going forward. And that's something, obviously, at Irvin we're really focused on what's the SEC going to look like, and who's going to be the SEC chair, and what does that mean for all of the regulatory reform we've been pushing for the last 3 years. And what can we hope for? Is there any hope now going forward for regulatory reform from the SEC? And I think that that hope is greatly diminished now. Not that Gensler has really done all that much, but again, I'm a person who says I adhere to this idea: personnel is policy. Trump's first administration, Jay Clayton was chair of the SEC, and that was a corporatist SEC that had no interest in reform at all. Gensler has tried to push some reforms through, um, some good, some not. But who's going to take over now? Is it going to be Hester Peirce as the next chair of the SEC? Because if it is, I'll tell you, the only thing happening is rules being done away with under a Peirce SEC. She is libertarian through and through. Other people who have been sort of thrown around, like I've heard Dan Gallagher as a possible one. He's the chief legal officer at Robinhood. He was an SEC commissioner, Republican SEC commissioner. Again, that would be, I do think that there are some people, opponents of regulatory reform, who are celebrating today. And certainly Ken Griffin, Jeff Yaz, Doug Sifu, this is a victory for them, or at least they see it that way. And again, if you look at what the banks are telling us, it's that deregulation is here now. And that's not an environment in which you're going to get regulatory reform. But things have changed over the last 4 years, and maybe there's some hope. Maybe there's someone out there that no one is talking about who will come in at the SEC, and there's some opportunity, but I don't know who that would be.
What do you think of the healthcare sector?
Healthcare is very interesting, isn't it?
Yeah.
And it's, like I said, it's flat today. And I find that surprising, because if he really puts RFK in charge of some of this stuff, that's like a death knell for big pharma. Yeah, I would think, and I guess I haven't really looked, but like what is big pharma doing today? So Pfizer down 2%. Let's see, Eli Lilly down 4%. So healthcare is flat, but big pharma looks like, at least these two are down pretty solid. And don't get me wrong, great, because I have nothing kind to say for big pharma. But it's there's a lot of unknowns. We have no idea, right? Like the Affordable Care Act, that was target number one the first go around, and fine, you can disagree with the policy all you want. What are you replacing it with? We have no idea. There's never been a reasonable proposal from Trump on what he would replace the Affordable Care Act with. So I'm waiting. I'm waiting to see. Do you know? Do you have any thoughts on it?
I don't. I mean, because to me, it seems like in general they would probably remain a little more privatized. But I think, especially RFK being involved, the way that looks might be different. But the other thing I consider there is the probability of any sort of significant change happening in the near term. I just see it as so low. I do think the ability to impact big pharma will be much quicker. And that was one of the big things I actually saw coming through today.
So interestingly, I'm looking at some hospital stocks.
Okay.
HCA is down 4.5%, and
Yep.
UHS down 4%. Good. I think the hospitals are awful. So, that's the market saying that some change is coming, at least to big pharma and the hospital stocks. So it's interesting that the healthcare sector ETF, maybe I don't know enough about what's in it, is flat. But that's more of what I would expected to see, the hospital stocks and big pharma down.
Yeah. So in healthcare, there's stuff like United Health, McKesson, HCA, CVS, Syncora. All of those are pretty much up today. Cardinal Health is up. Humana is up.
CVS up 11.5%. So why? Why is CVS up 11.5%?
They'll go out there and start dealing your drugs. Yeah, it's interesting too because CVS popped yesterday or like right on the morning, and then it's like hung right around where it's at. Let's see if there's any specific news on it. Really?
Yeah, maybe there's news. I find that surprising because CVS is like that they make a lot of money through PBMs and through their PBM, right? And like that's something that you would expect to be attacked now.
Yeah, it says increase in Q3 revenue. So it just looks like some follow through from earnings.
Okay. Yep.
Because when was earnings? Earnings was before the market today.
It's also we're seeing insurers go up. So Humana, United Health, Alignment are all higher, and CVS they have Aetna, right? They bought Aetna, I think. So that's interesting that the health insurance are rallying.
Yeah, because I was also really curious what biotech was going to do. Biotech is super mixed. Biotech is not clear. Pharmaceuticals largely down. Healthcare providers largely up. To me, those are actually some of my favorite kinds of pairs trades because this will really disjoint those relationships that'll probably normalize in not too long.
Okay, so let's now I'm going to switch gears and I want to ask you about your incredible DJT trading.
Oh, just YOLO.
Just
let's
YOLO. Hear about it.
It's honestly, it was super simple. It's the same thing I do everywhere else. So grab the chart. So back on the 24th of September, it had a big, massive move up, popped above 200-day MA, and it consolidated there on pretty good volume. So at that point, for me, that's just like a really low risk entry because all I'm going to do is trade it via long calls, and I'm going to have a stop below where I perceive support in that context. And right below the 200-day MA, there's a big volume node. So like 32.5 becomes stop out. And it's literally just a probabilistic play. I have no real dog in the fight. If I get stopped out to the downside, don't care. That the way that I trade is very Bayesian. I'm not coming out here with like Michael Burry style thesis where he's doing super smart stuff. He has like
who's your quant?
Yeah, it's like he has the utmost conviction in what he's doing, and like I'm the opposite. I have no idea what the hell is going to happen, but I try to find stuff that has decent probabilistic outcomes and asymmetric payoffs for this kind of play. Because I actually flattened out on futures for equities, and I flattened out on those. I mean, a while ago, like mid last month, and then I started scaling back into them on the 4th. Simply because it wasn't falling below another support level as I saw the 50-day moving average. And again, it's just one of those, it's a probabilistic play. Either I rest a stop below that support and I get stopped out and it is what it is, or it does what it's done and it almost cracks 6K. So as it's running up into 6K, stops just move up with it. I'm actually shocked that I haven't been stopped out of anything yet. I've just been following it all the way up. But the way that I looked at a lot of this is I had definitely more conviction in Donald Trump winning, and we picked up, that's just based on market positioning, like we've been talking about.
Sure.
And I started kind of identifying that. So I started when we were emailing last week, I was playing those calls, DJT. I ended up getting stopped out on what I had left running. And then I put a little more on yesterday, and then I took them off this morning. You just trade movement, man. And there's so much volatility around these kind of events, is that as long as I feel like you're like paying attention, it's kind of hard to dork it up. It's kind of hard because like if the way that people mess this stuff up is like yesterday there's people putting their life savings into DJT and then they were just going to hold it for the next quarter. Like, yeah, that's a terrible plan, dog, because DJT it's a company that has to be a company. It's being used as a proxy for an election to some degree. But what is that actual relationship? How do we measure it? Very difficult to do. And it's very difficult to assess the severity and the strength of it. So it's like, if that was your idea, I mean, I don't mean to be like crude, but it's like, it's no wonder you probably lost some money on that. It's just, it's not a solid thesis. But I think the interesting play now really comes down to taking a really big deep dive into the policies, like we were talking about a little bit earlier, and starting to position for those. Because that's something that we're going to talk about later today, because I think the time to position for that stuff has already started because it's been front run to a degree. But I think the rest of the time to get those kind of positions on literally is now, because it's going to be priced out super fast. The big boys are going to take a minute to get their positions on, but you got a few days before that goes down.
And where do you think you're positioning for that?
Yeah, so still long equities, obviously. I am running stops in them in case we get cracked out for whatever reason, and I would just re-enter. That's the way that I manage risk to the downside. Is I have absolutely no love lost. If, for example, if I had the position on in E-minis, market closed 59.57, small caps up 5 3/4. Big day for small caps. But yeah, it's generally long equities right now. I think the way that I'll run the position is kind of, as I was starting to explain, I'll keep the stops on. I wouldn't be surprised at all if I get stopped out after hours, because a lot of that volume and momentum will start to siphon out. And I think one of the biggest problems traders have is that when they get into a trade, they get stopped out and they're like, oh crap, like that idea is done, have to go do something else. And it's like, I have zero loyalty. As soon as it starts going back, I will get right back in. Like, I don't care.
You could have been right. Your timing was off.
And the thing is the way that I can manage risk while still putting on positions that reflect the idea and are appropriate for the account is by having stops that kick me out pretty quick, manage the loss to the downside. That's more for these kind of hyperbolic swing trades / just playing a breakout almost. It's kind of crazy to call it that, but it's like a S&P 500 breakout. So that's a big part. I definitely have long tech. So I still have long positions, both in tech futures and then also TQQs. That's more of a longer term trade for me. TQQs is interesting just because a lot of people misunderstand the volatility decay in it, and 3 times leverage is a little excessive. So you have to have a bit of a management approach. Otherwise, volatility decay can start dragging you down.
Yeah, you're not holding that as a long-term position.
Sure.
You are.
If it's behaving properly, no problem. And that's one of the misconceptions, is that the volatility decay, if it stacks in your favor, it can actually lead to returns that exceed the 3 times daily leverage. What starts to hurt it from a long-term holding perspective is that if you have an 80% drawdown, like it did, 82% drawdown,
right?
If you hold all the way through that and you're not scaling into it or something to that degree, then that's really problematic, because it still hasn't hit all-time highs again. Qs has.
Right.
So yeah, you just can't not do anything with something like that.
You have to manage that position. You can't just.
You have to do something.
That's important. That's what I'm saying.
You absolutely have to do something. Otherwise, exactly to your point, the volatility decay will chew you up. And for those that are unfamiliar with what that is, it's just a fancy way of talking about percentage changes, right? So if something drops 10%, it needs a greater than 10% return to get back to break even. So that's a component of the volatility decay. Then there's fees and friction and stuff like that. But yeah, I think the last thing I wanted to ask you about really quick is the war in Ukraine. He's talked about intervening and trying to tamp that down. What kind of impact do you think from that? Because to me, I think that there's a lot of potential follow through. He's actually been quite anti-war from what I've heard him talking about. And I'm wondering if that's going to bleed over into the defense sector. I was watching things like Raytheon, Lockheed, and it's a little inconclusive to me, but like Raytheon, big gap up on the day, but then overall red day. And that just seems a little interesting to me.
Yeah, like I said, they're good, and there's good and bad, and I'm I'm very much a pacifist. I don't believe in war, but I think it's easy to say you're anti-war, and it's harder to prevent war from happening without strength and military strength. So, I think Ukraine is something that I'm concerned about. I think that, it's not something that we could have supported in perpetuity, but this is a clear victory for Putin, and there will likely be no further arms sent to Ukraine, despite the fact that arms to Ukraine basically means money spent in the U.S. And so, I think if you are Europe, this is a very bad geopolitical development.
Do you think so?
I do. I think that from a geopolitical perspective, there are two fundamental things that one is good and one is bad. I think this makes an armed conflict with China much less likely, which I think is a unadulterated good thing. But I think it also leaves Europe wondering how staunch of an ally they have in America when faced with Putin's aggression.
I think the
And
opposite.
really, because you think that now Putin is going to get chunks of Ukraine. So the war is probably going to be settled, and probably at the current lines. And so that means Ukraine gets reduced as a country, and Putin accomplishes, that. And then what's the next move? Does he go into another country like Belarus or Poland? I don't know. And what does the U.S. do? What does the U.S. do if Putin goes into Belarus? Anything?
I would
Probably
wager. I would wager it's extremely unlikely that he would do that.
Why?
And because I think Belarus is a slightly different ethnic group than Eastern Ukraine and Western Russia.
I think it's very Russian. Belarus.
It's very. I completely agree, but I just mean in terms of like the history of that region is slightly different than from what I understand of the Eastern Ukrainian region. But the other thing is, I don't think it was happenstance that invasion happened when it did. Why wouldn't he have done it any time prior? Why wouldn't he have done it?
The initial invasion was from long ago, right? The Donbass invasion was 2014, I think, right? So, so I don't think that I agree with that perspective. I know that I've heard it a lot, and yes, you can sort of say that, but at the same time, I don't think the U.S. reaction to it was ever in doubt. Like, that was, of course, what the U.S. was going to do.
Right.
In either, like, regardless of who was in power. I know that people like to say that, oh, had Trump been president, that never would have happened. I don't buy that for a second, personally. I just don't think I think Putin was going to do that, and he was operating on his own timeline, and that's when the timeline happened.
I see. So you just think that they were completely separate things. Like, if that timeline happened to have lined up with a second Trump presidency or whatever, if he was originally reelected, it would have happened anyways.
I mean, does anyone doubt that Putin is celebrating right now?
I'm not sure that he is.
Really?
I genuinely don't know.
Now he knows that the U.S. support for Ukraine military support is over, and look what Russia was doing with the bomb threat in the during voting. I mean, that was like a direct attack on democracy.
I think the tricky part about that, at least in my opinion, is I don't see the U.S. stopping support of Ukraine without a completion to the engagement. So, for example, if they try to have a triad conversation and they just can't agree, I don't see the U.S. stopping supporting Ukraine. I don't think that'll happen.
Boy, I hope you're right. And boy, I don't agree with you on it.
Yeah, I think the stopping of sending arms and whatnot is purposefully designed to make it more likely for there to be a actual agreement and closing of the war. Because the other thing that I think from a strategic perspective, Russia can always scale this up as much as they want, technically.
Yeah.
And it can turn into something much bigger if they
Yeah.
do something like that, which is why they haven't. It's why it's stayed at the scope and scale that it has, in my opinion. Now, to your broader point, which I really do agree with, I think that Putin is doing Putin shit. And one of the things about Russia and China is that they don't operate in 4-year terms, right? How long has Putin been in power? Yep. So they have the luxury of time, to your point, to figure out their own timeline and figure out when they want to do stuff for whatever reason that is. So I agree with that they're playing a much, much deeper game. And I wouldn't be surprised, to your broader point, that they would be completely happy to have a little bit of more Ukraine and then to just go dormant for 10 years. I think that would be a massive victory in their world. Conversely, though, I think right now Ukraine is fighting a really difficult engagement that without external support, they are hopefully fucked. And that you can't win a war that way. You can't win a war completely depending on external support that goes on into perpetuity. You just get smashed.
No, I agree. And that's, and it has not been going well recently for them. And it's very sad. The whole situation is just horrific. I mean,
shitty.
What is worse than war? Honestly, what is worse?
Yeah.
It's horrific. And I include what's happening in Israel and Gaza under that
That's
as
a whole
well.
other thing, isn't it?
And Netanyahu, I believe right now is celebrating, and I would argue Putin is celebrating. And I think if you are Europe, you are confronted with a reality that has fundamentally shifted, and you are confronted with, and Poland has already signaled in anticipation of that reality, right, that they have started to work on defensive fortifications against a Russian invasion, and they are pouring money into that.
As they should.
Sure, but I think if you are Europe, this is a situation in which you are now saying to yourselves, we have to dramatically increase defense spending because we are unsure of what the U.S. will do, in a situation in which Russia gets more belligerent. So I think it's a scary situation from a European perspective.
Yeah, well, and it also highlights a really important just general sovereignty component. You have to be able to defend yourself. It's really, really difficult to exist if your defense is completely based upon an external support.
Okay, yes, but man, look at history since World War II. The deterrence effect of the U.S. Military has been incredible, right? Like the peace across Europe is unprecedented in history. What we have seen over the last 80 years, and that is being threatened now. So it's very easy to get caught up in what we have known as reality for the last 80 years, and to disregard almost all of European history before that. But I don't think you can do that, and I think
I agree with you. I fully agree with you, because
it's a tense geopolitical time now.
Yeah,
with China, with Iran, with Russia, and with what Israel is doing. I think there's some scary shit out there, and
yes,
and the U.S. needs to be a strong ally right now.
And I agree with you.
I hope we continue to be.
And I think one of the broader points is I don't think us ceasing arms support and negotiating a ceasefire is us not being an ally. I actually think it is us being a pretty significant ally, because one of the big reasons why the deterrent works so well is when the U.S. is willing to get involved. Not get involved in terms of sending you guns. It helps, but that's different than us sending a Marine Expeditionary Unit to go park off your coast.
Yeah,
and to let you know that there's going to be human beings there soon. So the problem I see with the way that we're supporting right now is just by giving them materials, which is good, it's helpful, but that still is not going to win the conflict for them.
Do you think we should have put boots on the ground in Ukraine?
I think that we probably needed to negotiate a much harder line much earlier. I think that we let that devolve. And because the problem is that the longer that those kind of conflicts go, the more entrenched everybody gets in their sunk cost. Yeah. Because then Ukraine is like, well, damn, we've been doing this for 2 years now. We just want our border back. And then Russia's like, well, we've been doing this for 2 years now. We're
not going to come out with nothing.
Yeah, we just want it. Exactly. And I think that boots on the ground probably should have needed to be a way more prescient upfront threat that was believable. And I think that there would have been a much faster resolution to it. Because in terms of financial support, even if you look at, I totally get your idea of like European support and the US component of it, but it's really difficult to essentially see the way that playing out long term in the current state, because it's been expensive and it's not fucking working. So then what does that mean? Do we just keep spending more and more money on something that's not working? And then
what do you say is not working? What's going on in Ukraine and the way
the proxy war, essentially. I think the proxy war is not working because we're spending tons of money.
Not working for the US.
Or Ukraine, more importantly, is my perspective.
Certainly not working for Ukraine.
Yeah.
I don't know for the US, it hasn't been working for the US.
Yeah, I agree with that, because the U.S. we're testing ideas, we're looking at TTPs, we're getting a lot done from a very selfish perspective.
And those billions of dollars that flow into this war are flowing into U.S. manufacturing and arms, and it's not like there's billions of dollars being handed to Ukraine.
Completely agree.
Right?
Completely agree.
It's material that's produced in the US, and like you're saying, working on strategy, being exposed to this sort of new era of drone and unmanned warfare and learning from
it. Which is terrifying.
Agreed. 100% agreed.
Yeah.
And so, I would kind of argue that's worked out unfortunately well for the US.
From that perspective, I couldn't
given the sacrifice Ukraine has had to make.
Exactly. I was going to say, I was definitely looking at that in the context of the proliferation of the conflict and what's happening to Ukraine. And so, I mean, in terms of just again, I'm military minded, right? So I'm thinking of like actually being granted a strategic victory over Russia, which is not happening. No. We're having lots of other stimulation going on. And again, it's unfortunate, but the amount that we have learned about Russians' TTPs is, I cannot express to you how important intelligence is in winning conflicts. And the amount of intelligence we've been able to gain from a disgustingly safe position is massive.
You want a fascinating book to read?
I do.
It's called James Bond's Commandos. And it's, it's called Ian Fleming's Commandos.
I was like, James Bond.
Yeah. So Ian Fleming, the author of the James Bond series, was a naval intelligence officer in the British Navy during
in
World
1941.
War II. Yeah.
Yeah.
It's such a I actually just read it. It's such a good like spy history book, which I love that kind of thing. I just devour spy history and intelligence history.
Yeah, I'm stoked to check it out. What a great recommendation. Thank you.
Yeah, it's actually it's made me now, I really want to go read the whole James Bond series. I've never read one of them. And they must be great. Like, they're so popular. The movies I love the movies, right? Like,
yeah. Oh, cool. I'm stoked to check that out. Thank you for I love good book recommendations. I'm stoked on that.
Got a whole library back there, and there's so much military and intelligence history. So that'll be our next episode of Let's Talk Markets with Eric at Outlier Trader. We're going to talk military history and
Hell yes. Hell yes.
All right. Anyway, we've gone on long enough. This has been great. I feel like we could just talk forever, but fascinating conversation, Eric. Thank you, as always, for joining us, and thanks for your insights on markets and how you're trading them.
Absolute blast. Great to connect.
Yep. So, and everyone, thanks for joining. Great to see all of you. We got great numbers on live viewers. Really appreciate you tuning in, spending your Wednesday afternoon with us. I don't know if all of you were up late like I was, but I'm sure everyone needs some sleep tonight. So I hope you all sleep well. The world is not ending, and it's. I
It will
think
be okay.
we're all going to be okay, and there's always good and there's always bad, and let's hope that we see the good and we fight against the bad, as with any, regardless of who had won, that would be the case. And so good luck to all of you and getting a good night's sleep tonight, and we'll be back next week with another live edition of Let's Talk Markets. And now for those awkward moments when I hit the end stream.